So first of all, we need to understand what is the purpose of the money market. Okay, so the purpose of the money market, okay, used for the, okay, short term and mid term investments are for the borrowing purpose. Okay, or for the borrowing of the liquidity funds. Okay, now if there is any requirement for our business organization, we want to borrow the funds from the market, means, okay, either, okay, under this money market there are different kind of financial instruments are there. Each and every financial instrument has a separate, okay, functionality, but where you can able to see that, okay, it's a product type, transaction type, transaction category, all these terms you will be able to hear it's a repetitively, but each and every instrument, okay, has a different functionality and a different usage, and also even different configure. Sometimes if required is a configuration, also different configuration setup to be required for each and individual, okay, financial instrument. Okay, now as I have explained the purpose of the money market, okay, it which we can use for the to borrow the money from the market and to, okay, borrow and for the investment purpose, and it is for the short term investment or short term borrowing purpose only the money market we can use. Means, it's, I mean, you cannot see that one, it's a longer period. Okay, so, okay, so this is the purpose of the money market. Then let me go here, we'll discuss one by one. Okay, so first, let me take a small example. Let me take the small example. Please concentrate here. This will be useful for you. Okay, even see how you need to gather requirement in real time. Okay, in this way you need to understand the client business requirement and you need to get the requirements also. Okay, during the requirement gathering phase itself, the discussion now what I am going to explain, it will be useful for you. Okay, now let us assume first point number one. Okay, now what after let us assume now for 2022 financial year. Okay, once the financial statements will be prepared by the respective auditors, then what the treasury department or the, okay, CFO, okay, chief financial officer has been identified that, okay, there are some excess funds. Okay, excess, it's not the reserves. Okay, it's the excess funds, the funds which are excess funds, okay, earned by the organization. Okay, those funds, okay, what the management has been decided that, okay, first let me put the point number one. Okay, as a CFO, okay, chief financial officer, okay, as a CFO, after analyzing analyzing, okay, he found, let us assume 10 lakhs rupees of the, okay, fund it is there. Okay, 10 lakhs rupees, okay, 10 lakhs rupees, okay, amount as a surplus. Sorry, it's an okay, surplus only. Okay, surplus or corpus fund, whatever it may be, surplus. He found that 10 lakh rupees, okay, which is there in the organization. Okay, I mean, they don't want to use that one. What organization has been decided that, okay, the CFO has called you. Now let us assume Ashok will be there as a treasury consultant. Okay, he called to you, then he has given instructions. Okay, what is the organization expectations? Okay, first of all, okay, he will give the instructions. Okay, now let us assume the second thing would be the expectation of the organization. The expectation of the organization, they want to take, first of all, they want to take risk, they want to take less risk. Okay, remember, less risk. and the interest, and on the investment, the organization or the management, the organization, okay, is looking decent return. decent return in the sense the money what they are going to invest. Okay, it is a, I mean, they don't want to take much risk, they want to earn the interest. It's a decent risk without risk. Okay, then at this point of time what management has been decided. Okay, now, now as a CFO he has given instruction. Okay, so okay, now I will ask you question to you people. Okay, now let us assume if without risk. Okay, so for this kind of investment can I go the management, or as a treasury consultant can we suggest, okay, can we invest this money into the forex? Ashok and for you people, okay, you can answer me. Okay, can I invest this money into that my equities, or my into bonds, or my into equities, or my derivatives wherever, okay, or forex?
No, I can suggest a mutual funds.
Okay, see, mutual funds also it's a depends on the market fluctuations, right?
Yes.
But management is expecting that they don't want to such kind of risk. They don't want to take such risk.
Then opposite that one, in that case, it is a fixed fixed.
Exactly. Exactly. So the decent return, okay, the decent return what management expecting that the management do not want to take much more risk on their amount. Okay, so that is the reason the management is going to, okay, then as a treasury consultant we can suggest them. Okay, or else the CFO also they themselves know that one we in which product we need to invest that amount. Okay, the management has been decided that we can go and we can invest that money into the into that fixed term deposit. Okay, the management what the see, you need to understand in this way even during the requirement gathering also, remember. Okay, the as per as as per organization expectation, the suitable product, the suitable product is okay, FDA, fixed term deposit. Means in the fixed term deposit if organization is going to invest, let us assume, okay, 12% of the interest they are going to earn per annum per year. Okay, per annum interest per yearly they are going to earn 12% decent interest without risk. Okay, they just invest the money into the bank account. Okay, then they don't want to, I mean there will not have any risk. Okay, then what I have done, what we have discussed here up to now. Okay, as per the organization requirement, the requirement as met. Okay, for each then okay, so then after this one, okay, and every time, okay, whenever we are posting a business transactions, okay, we must required, okay, after posting the transaction, after posting the transaction, okay, after posting the transaction, what things to be update, I want to update as a cash flow to be updated. Cash flow transactions to be updated means that transaction mean either it's an investment or borrowing, whatever it may be, it has to update my cash flow. Then the next one would be a PNL account. If it is a profit and loss account, it should get updated PNL account. and in case of any, okay, in case of any accruals and deferral, okay, in case of any, in case of any accruals and deferrals, okay, in case of any accrual and deferrals. Okay, this is my expectation. My expectation would be when I am going to perform the business transactions, this is my expectation. Okay, now in this expectation in this expectation, okay, now this is the business expectation. Okay, now let us put this one into the, let us frame this into in one another sheet, one in one Excel sheet. Okay, now the requirement is that I have the 10 lakhs rupees money. Okay, for this 10 lakhs rupees, let me put it like this. What I will put, it's okay, so product type, then transaction type, then condition type, then flow type, then the general valuation class. Okay, general valuation class, then accounting and payment, then okay, if required we'll see that the next one, correspondence, it is there, how to generate the correspondence. Okay, so these are the things we must have to, okay, then we'll discuss one by one in detail. Okay, you need to understand, okay, before do the configuration, you need to understand, this is a very important one. If you understood well I mean that Excel sheet what I'm going to frame here, so it will be easy for you while doing the practice. Okay, while doing the practice it will be very good, it will useful for your, okay, you can understand easy, and it will be easy for you also. Okay, what is going on? Okay, exactly. Now let me take the example. Now let me take that example here. Okay, now okay, money. Okay, here is the excess money we have is at 10 lakhs rupees, okay, in our bank account, whatever it may be. Then the second one is that, okay, for whenever when I want to invest this money, okay, now I have this much money. Now the next one, okay, what we have decided that, okay, investment, okay, we have already suggested to the management we would like to invest this amount into the fixed term deposit. Okay, investment invest the money into FD at 1 year. Okay, for 1 year, for 1 year, 1 year a time period. Okay, then for 1 year, okay, and the investment of 1 year or 12 months, or whatever it may be, 1 year and 12 months, and full repayment on maturity. Full payment means after once the my tenure will be end, means I have invested my money into bank account only for the 1 year only. After once the 1 year, the time duration will be completed, what the bank has to do, the bank should make the repayment along with the interest, means along with my 10 lakhs rupees, then the interest amount, how much interest the bank need to make the payment. Okay, the bank along with this my principal amount and and interest, the bank should make the payment. Okay, now what I can do here, okay, what is this one, okay, now now to invest the money, what is going to, okay, we have already discussed about product type. Okay, fixed term, where we are going to invest. For this one, the product type would be a fixed term deposit. Okay, we have already decided that the money which we would like to invest into the fixed term deposit. Okay, the product for to invest that money into FD, what kind of financial instrument to be required, the financial instrument fixed term deposit to be required here. Okay, now let me go here under this money market product type. The product type, already there are pre-delivered SAP pre-delivered product types are available, but one my suggestion here is that don't take or don't use any standard SAP delivered product type. Okay, you can create on your own, then only you will understand the logic what is going on. Okay, let it come errors also, you need to face that errors, you need to resolve, then only you will understand completely flow what is going on. Otherwise, if you just use the standard product, what will happen? Okay, you don't understand the logic, because if to work this product type in the back end, we have to do many settings. Okay, that is the reason I would suggest you, okay, you can directly create new product type, or if you are not comfortable that to create new product type, you feel that okay, there might be some settings are missing, then you can create at least copy, and you can create new product type, set up a new product type, just for your information. Okay, if you use the standard product type, what will happen? Definitely you will not understand the logic what is going on. Okay, so now the product type, now we can see the fixed term deposit, deposit at notice, commercial paper, cash flow transaction, okay, interest rate instrument, variable interest rate, fixed interest rate. Okay, okay, now bilateral facility, okay, syndicate facility. Okay, there are different financial instruments which are available here. Okay, so here the most famous one is a fixed term. Most of the organizations will be used is a fixed term deposit, deposit at notice, a commercial paper. Okay, and in interest rate instruments. Okay, most are the cases they are going to use this. I mean, these are the quite common usage. I mean, quite common implementation for the clients. Okay, just for your information. Okay, so this facility and all, okay, facility, if they want any bilateral facility, syndicate facility, I will just give the overview of this one. Okay, how it is going to work. Okay, now here we have seen the product type. Okay, now product type, we have decided that the fixed product, I mean the product type which I would require is a fixed term deposit. Okay, then what is the transaction type? Okay, the transaction type, it is going to represent that, okay, it is anyhow it is going to associate with the product type. But what is the purpose of transaction type? Okay, the transaction type is that, okay, then either it's a investment or borrowing. The transaction type, it is going to decide that if you are going to borrow money from the market, the transaction type is a 200. If you are going to invest money into the market, means market in the sense it's a bank. Okay, then the transaction type is a 100. Okay, let me show you that one. Just go back here. Now come to the transaction type. See, each and every product, okay, whatever we have seen here, this we are going to call it as a financial instrument. Okay, in treasury point of view, and each and every financial instrument has a different usage and a different functionality. Okay, but if required, we have to do some additional configuration also for each and every product type. Okay, then come back here, we have seen the product type, then transaction type. Okay, now come here. Now you can see for fixed term deposit, if it is an investment, okay, the transaction type has given. Okay, if I go drop down here, just remove this one. Okay, not transaction category. Okay, so the transaction type is 100 is for investment, 200 is a borrowing. Okay, so even this standard SAP has been delivered the transaction types. Even in the real time also, we are going to use what standard SAP delivered. Okay, so no need to create the new transaction types here. Okay, so now come to the transaction type. What we have decided here is that, okay, investment. Remember, keep in mind here, invest. My transaction type is a investment, in the sense it is a 100. My transaction type would be a 100. Then what is the condition type? For what purpose the condition types to be required? Okay, now on my investment, okay, what is the appreciation? So the appreciation of the investment, it is a nominal interest, right? Okay, the bank has to make the payment, okay, interest during the, okay, when it is going to mature. Okay, so it's a nominal interest or interest. Okay, I could say it is a interest. Then what will happen? Okay, then we have seen the product type, transaction type, condition type. Then let us go to, here is the, okay, let us go to flow type. Then the third one, once the transaction type has been processed, okay, has been posted, what, okay, has been processed, okay, cash management, okay, then valuation, it has to be valuation, right? It has to be valuate, means the valuation in the sense, okay, for what purpose, for which accounting principle we are using for the valuation of the product, either we are using for the, as per Indian accounting standards or US GAAP, whatever it may be, that depends on the client requirement. Okay, then accrual and deferral, sorry, accrual and deferral, accrual and deferral, okay, then other accounting functions, okay, need to be affected, okay, other account other accounting postings. Then, so here for this one, if I want to post a, okay, so if I want to do this one, okay, then what I would require, how the transactions are going to hit to my finance, then what I would require is a flow types, okay, flow, I mean, okay, first I, let me put it here is a condition type, okay, so the condition type, this when it is going to happen on full maturity, on full repayment on maturity, full repayment on maturity, okay, so then here flow types, means the flow types are, okay, two types, the flow types are there, two types are there, flow types, standard flow types are there, derived flow types are there, okay, the purpose of the flow types, now I have created a deal at treasury level, okay, once the deal will be created, I want to post the transactions, means after investment what will happen, the money will be credited from our bank account. If let us assume the money which I am going to invest into fixed term deposit, okay, what will happen, my investment will be increase, my bank account balance will be decrease, okay, means the money which which we need to transfer to the, okay, respective bank, okay, what will happen, the investment will be increase, then my bank account will be credit, okay, at this point of time I want to have the same entry into my books of accounts. So how the entries are going to update into in my books, okay, means the flow types are playing key role here, even the flow types also, the standard SAP delivered flow types which we need to use, no need to creation of the new flow types, okay, remember, even in the real time also you can use the standard SAP delivered flow types only, no additional flow types to be required, okay, just for your information. Okay, now as I explained, flow types are two types. One is a standard flows, another one is a derived flows. Okay, the derived flows, okay, let me explain you what is the difference between both. The standard flow types are like, if I want to post some business transaction like a investment increase, okay, means from treasury to FI directly, the straightforward the system it will get posted. Then this is the standard flows what SAP has been delivered, okay, even we can use the same. Then derived flows in the sense, okay, on this investment now I am going to charge some taxes, maybe if it is applicable, the broker, some charges, some withholding taxes or some input taxes, whatever it may be, okay, some charges, okay, so then only the derived flows will come into the picture, okay, so in the derived flows you must have to specify the condition, okay, with that condition what system does, it will calculate the amount, okay, based on either it's a percentage or either it's a amount, whatever it may be, it's a depends on the requirement, you need to define the derived flows, okay. Now flows is a investment increase, okay, let me see, here is a, investment increase. Okay, now here the general valuation class, whatever it may be, as per as I have explained. Okay, so however you want, either it's IFRS purpose or GAAP purpose, whatever it may be, let it put it is a IFRS purpose. Okay, then then here is the accounting and payment. Okay, now let us assume when, okay, now let me go here. Okay, the condition type, I will show you the condition types here to show the condition types. Flow types here already it is there. Condition type, let me come here. The defined condition type for transaction means money market transactions, means no need to define condition. That's what I told you. You can see here, you can come back, you can just click here. See, final repayment, when I am going to receive money, okay, from the bank after once the maturity will be happen. Okay, the final repayment, for this one we must have to map the, okay, product type. Then investment repay, okay, installment repayment, annuity repayment, okay, interest capitalization, nominal interest. Okay, it's a nominal interest for CP. Okay, then facilities fee. Okay, it's a depends on your requirement. Now you can see the flow type is a 1901. Okay, with this product, with this flow you must have to assign in your product type. Charges, commission, withholding tax, there are additional, okay, flow type, the standard. Now see, withholding tax. Okay, so there are different other conditions which are available, but these condition types, if you want to do some, if you want to make some charges, means if you want to apply some charges on this particular transaction type or particular deal, you need to select these flows. Okay, then you need to, then it will work, otherwise it will not work. Okay, I will show you that one. Okay, these are the standard SAP delivered, okay, condition types. Then flow types. Okay, to this condition types we must have to assign the, okay, our product type. Then if I come here, assign condition types to the, means we will define the new product type for this one. Then we'll see that one. Okay, now flow types. See, now defined flow types for the money market transaction, assign flow types. Okay, so condition types we have seen, flow types we have seen. Okay, now it's a okay, now this we have
What
seen.
about update types? Huh?
See, update types also to be required. Yes, okay, I will explain you. Okay, update types means it will get updated into the transactions. Okay, so here transaction, let me go here, the flow types. Okay, update types, okay, define update types and assign update types, means the update types based on the account assign. It's a like, it's a simple terminology, account assignment reference. It's a like a similar way. With this, by using this update types, what I am going to do here is that whenever whenever I am going to map that account determination, okay, though the account determination me need to map my update types, okay, which I have to select these update types while doing the account determination. Okay, now here I am going to put it that one, the account determination here is the account determination. So in this account determination, it will come into picture. Okay, now the correspondences and all. Okay, correspondence we can create correspondence in the sense letters. Okay, means how we can print that letters. Then the next one would be a, now see what I have done. We have seen the product type. Okay, how we need to structureize the product type. But where you are investing the money, we are investing money into the, okay, fixed term deposit. Who is going to offer that fixed term deposit? Either banks are going to offer or either financial instruments are going to offer. Okay, so it's a depends on your requirement. Okay, where you want to invest that money. Okay, so for that purpose, okay, what we could say, now let us assume the money which I am going to invest into the HSBC bank. Okay, HSBC bank account. Okay, so in this okay, so the HSBC bank account, what we could say to, what we can say, who is HSBC bank? Okay, the HSBC bank, okay, he is a Okay, he is a counterparty. We must have to define a master data, okay, BP master data for this HSBC bank. Who is this? Okay, the HSBC bank is a the role which we need to define is a counterparty. Counter Counterparty. Okay, this is the role we must have to define the business partner. Okay, now you need to structureize the product in this way. Okay, so that it will be easy for you. Okay, if you see this structureize, what you feel that okay, now I have all the things are ready, okay, to do the configuration. Okay, now what you will do once the product is, once you will feel that now everything is looks fine, then what you can do, then you can go and do the configuration. Okay, remember this is the way you need to understand the requirement in the real time. Okay, now tomorrow what we can do, we'll do the configuration. Okay, we can do the configuration, and for account determination, okay, what are the GL accounts to be required, we'll create some GL master data also. Then we can we can continue the session. Okay, remember, okay, this is the way you need to understand. This is the important, even in the real time also, while understanding the requirement, you need to understand the same in the similar way.